Hey everyone, Alexander here. Before we dive into today's topic, I want to take a moment to introduce myself properly, because I realize many of you are new to the channel. I'm not some faceless trading guru or algorithm behind a screen. I'm a real person who's been in the trenches of this market for over 12 years now. I started my career on a proprietary trading desk in Chicago back in 2013. Got absolutely destroyed my first 6 months, nearly quit 3 times, and somehow managed to claw my way to consistency. I've traded everything from equity index futures to Forex, commodities, and even dabbled in crypto during the 2017 madness. These days, I trade primarily ES and NQ futures, and I'm here to share what actually works versus what sounds good in theory, but fails spectacularly when real money is on the line. Now, let's talk about why your entire trading journey fundamentally transforms once you cross that $1,000 monthly income threshold. And I'm not talking about a single lucky month where you caught one incredible setup and made $1,200. I'm talking about consistent, repeatable monthly income that you can reliably extract from the markets. This isn't some arbitrary number I pulled from thin air. There's actual psychological and practical significance to this milestone that most traders completely underestimate. First, let's address what happens to your brain chemistry when you start making real money. Before you hit consistent 4-figure months, trading feels like gambling because, honestly, it probably is gambling at that stage. You're not truly profitable. You're experiencing random variance that occasionally swings positive. But the moment you string together 3 consecutive months above $1,000 using a defined strategy with documented edge, something neurological shifts. Your amygdala, the fear center of your brain, starts recognizing trading as a legitimate income-producing activity rather than a threat to your financial survival. This is critical because fear-based trading is the #1 account killer for retail traders. When you're terrified of losing because you haven't proven you can consistently win, every position becomes emotionally charged. You exit winners too early because you're desperate to lock in profit. You hold losers too long because admitting defeat feels like personal failure. You revenge trade after losses because your ego is attached to every single outcome. Once you cross $1,000 monthly for multiple consecutive months, these fear patterns begin dissolving because you have empirical evidence that you possess legitimate edge. Furthermore, the $1,000 threshold represents the minimum income level where scaling becomes mathematically viable. Here's what I mean by that. If you're making $200 per month trading a $5,000 account, you're generating 4% monthly returns. That's actually exceptional performance, 48% annualized if you can maintain it. But 4% of $5,000 is just $200, which doesn't change your life. You can't quit your job. You can't reduce your hours. You're still completely dependent on external income, which means trading remains a side activity that gets whatever leftover mental energy you have after your real job exhausts you. However, once you're consistently generating $1,000 monthly, you've likely grown your account to somewhere between $15,000 and $25,000, assuming you're maintaining reasonable risk parameters of 1 to 2% per trade. At this account size, you have enough capital to actually scale your position sizing without violating risk management principles. You can start taking 2 contracts instead of 1 on your highest conviction setups. You can diversify across multiple instruments without spreading yourself impossibly thin. Critically, $1,000 monthly also represents the psychological threshold where most people start believing trading could eventually replace their primary income. If you're making $1,000 now, the path to $3,000 doesn't seem impossible. It's just 3 times your current performance with proportional capital growth. $3,000 monthly is $36,000 annually, which approaches living wage in many regions. Suddenly, trading transitions from hobby to potential career, and that mindset shift changes how seriously you approach every aspect of your development. Additionally, crossing $1,000 monthly forces you to confront tax implications and business structure decisions you could ignore when making $200 here and there. You need to start tracking every trade for tax reporting. You should consider whether forming an LLC provides liability protection or tax advantages in your jurisdiction. You're no longer just a person who trades occasionally. You're operating a small business that generates reportable income, and treating it professionally becomes non-negotiable. The final transformation that occurs after consistent 4-figure months is community perception. Other profitable traders start taking you seriously. You're no longer the beginner asking basic questions in forums. You're someone who's proven they can extract money from the market consistently, which is rarer than most people realize. Only about 5 to 8% of retail traders ever achieve sustained profitability, and far fewer reach consistent 4-figure monthly income. This opens doors to collaborations, mentorship opportunities, and access to proprietary trading firms that actually want to back proven traders with institutional capital. Once you demonstrate you can make $1,000 monthly with your own $15,000 account, prop firms will seriously consider giving you a $100,000 account because the math works. If you can generate 6 to 7% monthly returns consistently, you're an asset they want managing their capital. So if you're currently grinding away trying to reach that first consistent $1,000 month, understand you're not just chasing an arbitrary number. You're pursuing the inflection point where trading transforms from expensive education into legitimate income-producing skill. Keep pushing, stay disciplined, and I'll see you in the next one.